A very good evening to all the participants. On behalf of ACAE, I, C.A. Sakshi Dhajaria, am pleased to welcome you all in this GST litigation series. I'm sure that the last few days have been a wholesome learning experience for all of you, and we're all set to begin today's session with our esteemed speaker, C.S. Aditya Singhania. And it is my privilege to introduce him to all of you. C.S. Aditya Singhania, a professional company secretary, holds core expertise in indirect tax laws, both relating to GST and other erstwhile service tax, VAT, etc., with over 8 years of experience in indirect taxes. He has wide range of experience in multiple sectors, including transportation, telecom, real estate, textiles, e-commerce, etc. He has authored several books which have been published by Taxman, namely GST Practice Manual, GST Refunds, GST Audit and Annual Return, GST E-Invoicing, and so on. He has experience in handling litigation, advisory, health checks, contract reviews, etc., and actively writes and speaks on various ongoing indirect tax issues. He actively shares his views on latest developments in GST with ETCFO, The Hindu, Business Line, Hindustan Times, Economic Times, etc. He has been a panelist on Times Now and DTVI news channels. He has formerly worked with DGM Indirect Taxes, that is with Taxman Technologies Private Limited, and has also been a senior manager indirect taxes with Bharti Airtel Limited. He is on the board of advisors in Taxman's research and advisory wing and is the founder of his firm Singhania's GST Consultancy and Company and engaged in providing compliance advisory and litigation services. We are really grateful to have him here as the facilitator of today's session on issues in exports, imports, and refunds. And at this moment, I would like to present to you, sir, an e-memento as a token of gratitude and appreciation. I'll just present my screen. So can we have a virtual round of applause?
Thanks so much, Sakshi. Thank you so much.
Thank you. So with this, I would like to hand over the proceedings to you.
Okay, thank you so much. Hi, everyone. Good evening. Can I get a greetings in the chat box? Everyone, please. Hello.
Is everyone able to hear me?
Yeah, so the audience is active. I can see the greetings are coming. Good evening, everyone. So first of all, at the outset, I would like to thanks to the all the associations, all the 3 associations which have taken this initiative of conducting the advanced course on the GST litigations from the GST litigations perspective, right? Besides that, I would also be thankful to Shubham Khaitan and Tarun Gupta Bhaiya, who has given me this opportunity to deliberate on one of the crucial topics, which is GST refunds, right? So without wasting much time, because I know that there are a lot of contents which needs to be dealt with GST refunds, right? So I'm just starting right away with this topic. So is everyone able to see the PPT which I'm sharing here?
Oh, yes, it's visible.
Okay. So first of all, we need to understand that refunds under the GST is neither a constitutional guarantee nor it is a statutory entitlement, right? You cannot go to the government and approach and ask for the refunds unless and until that has been encompassed within the framework of the law. So let us look where are the GST provisions incorporated within the law. So if you can just have a bird eye view of the GST, you'll find that there are 21 chapters which start from the preliminary provisions related to GST, then administration, registration, invoices, return filing, payments, refunds, and so on and so forth. So the refund related provisions are given in chapter number 11, which under the CGST Act from section 54 to 58. There is an IGST Act wherein section 16 of the IGST Act also deals with the refunds of the zero rated supplies. So now if we go into the section specific that what each of the section deals with, then section 54 deals with refund of tax, 55 deals with refund in certain special cases, 56 is related to the interest just in case if the refund which you have claimed is being given, but there is some delay on that. And thereafter, there is a consumer welfare fund wherein if you are not supposed to get the refunds, and that goes straight away into the consumer welfare fund. And thereafter, how that fund is being utilized is given under section 58. If we see the rules, then it starts from 89 and it goes up till 97A. So if you look from rule 89 to rule 94, then these are the basic rules which are more related to the procedural aspects. So if you can see that a refund of tax, what refunds will you get? Thereafter, the acknowledgement of the refund application which you file, the grant of provisional refund, and so on and so forth. So one thing you need to be very categorical because when we go and deal with the issues, that what are the issues in the GST refunds, first we need to have a solid grip on the provisions of the law. So first thing we need to remember, the important provision is section 54 and the rule 89 to 94. So these are the process. So now section 54 one says that you will get the refund of what, when, how, and by whom. So if we ask that what refund will you get, obviously what happens that let's say everyone assume that you have started your own business. Okay, now you have started selling your goods or services, whatever you are engaged in, and thereafter you have made the payment of tax. Now if that tax has already reached to the government's treasury, why will the government refund? There should be, obviously when the government is asking you the tax, then where is the question of refund coming from? So we really need to see that what are the scenarios in which the refund is guaranteed under the statutory framework. Besides that, you can also get the refund of interest just in case if that is paid on the tax, and that tax in itself is supposed to be refunded to you, or any other amount like pre-deposit, ITC reversed, accumulated input tax credit, late fee or penalty. There could be various scenarios in which all this can be refunded, but it depends from situation to situation. Now, we are going into the refund process. So you can see here, yeah. Are you all able to see my cursor also? Sakshi?
No, I guess the cursor is not visible. Yeah, it's visible now.
It's visible now. Okay,
Yeah.
thank you so much. Yeah. So now what happens that I have taken registration in GST. I have started filing my GST returns. I have done the payment of the tax, and based on which I have filed my 3B or respective returns. Now, upon payment of tax, only the question of refund arises, right? So the first thing is that from the relevant date, you need to file the refund application. Now, what is the relevant date? So that depends upon the situation, which we'll see in our upcoming slides. So let us first assume that there is some date on which you have made a payment of tax, and now you want to claim the refund. So for claiming the refund, the time limit given is 2 years. And please remember that there are only 2 forms in GST law through which you can claim the refund. One is RFD 1 and another is RFD 10B. Right. So now in RFD 1 is the main form wherein almost all types of refunds are being covered except on export of goods. So now where will you file this refund application? Certainly on the common portal along with the documentary evidences. Now, documentation is a one most important and the critical part, because if you do not give all the documents required, then probably the officer may give you some notices or something like that, right? So the documentary evidences is given under section 54 subsection 4, read with rule 89.2, along with the master circular 125. Now, why do we call it as a master circular? Because there are various circulars which have been issued on refunds, and in order to, in order to simplify the refund procedures, all those clarifications we have made, so we are calling it as a master circular 125. Now, once you file your RFD1 form online, you will get an acknowledgement reference number immediately. Now, once that ARN is being generated, that application is being forwarded by the common portal GSTN to the proper officer. Now, that proper officer takes its own time of 15 days, and thereafter he has to issue either the acknowledgement or the deficiency memo. He takes a 15 days time is being given to him. Now, after the acknowledgement has been issued, then if at all, if he has some query, or if he is of the view that no, the refund is not supposed to be entitled to the applicant, then he will issue you a show cause notice in RFD 8. And within 15 days time period, we need to file a reply in RFD 9. If he is being satisfied with that, then he will issue a refund order, sanction order in RFD 6. If he is not satisfied, so if he is not satisfied, then he will issue, then also he will issue the same RFD 06, but that will be a rejection order. Now, over the period of time, it has been realized that the officers, in order to reject the refund, they only give you a show cause notice. They fulfills the condition of natural justice, and they merely pass a one-liner orders. And even for the sanction order also, if the amount is completely eligible and according to the officer it should be sanctioned, then he also issue a complete, the refund order without giving any speaking order. But an instruction number 3/2022 was issued, wherein plethora of details has to be given by the proper officer along with RFD 6. So now onwards, it has been mandated that a speaking order has to be given. Now, why this speaking order is to be given? It is because once the proper officer pass this refund in RFD 06, the refund application is being transferred to the refund module. Now, refund module, what this is basically in ICS, there's a module which is called as a review module. Okay. And in review module, there are two authorities, basically an audit cell and the review authority. So the audit cell, if the claim is more than 1 lakh rupees, then the audit cell will do the post audit of the refund sanction order. And if there are any findings, they will pass it on to the review branch. So currently there is no online mechanism available with the proper officer. So it is being transferred offline through e-office under the review cell. So within 3 months, they have to do their audit, and thereafter he has to send it to the review cell, and the review cell within before the end of the 38 days to file the appeal, departmental appeal, because the departmental appeal time is 6 months. So 30 days before the filing of refund, they will give that whether the appeal has to be filed or not. So now once this exercise is being done, after the sanction order, RFD 5 is being issued, which is called as a payment order. Now, after the payment, now payment order can be issued only when their PMFS validation is being done of the bank account, because ultimately the refund has to be credited into your bank account. So this is how the refund process works. Now, here there are few important pointers which I want to highlight is that once the deficiency memo is issued, right, the further process will not be continued and you will be, whatever amount you have debited from your cash ledger or credit ledger to claim the refund will be automatically recredited and there will be no issuance of PMT3, right? But if the rejection order, before going into that, what I would say that once the deficiency memo is issued, then you have to again file a fresh application, rectifying all your deficiencies. Please note that this period of 2 years will not be counted for the purpose of fresh application for determining the period of 2 years, the period between RFD 1 and RFD 03. Further, once the fresh application is being filed, rectifying all the deficiencies which the officer has pointed out, no deficiency memo subsequently has to be issued unless and until there is something severe has been found out. Now, one more important thing is that once the refund application is being rejected, and if you are going to file an appeal, then the amount will be not within the amount which you have debited from your cash ledger or credit ledger to claim the refund will not be credited back. So if you want that you are not going to proceed with the, if you are accepting the order and you are not willing to file an appeal, then you have to give an undertaking, then you would, your amount will be recredited to your respective ledgers. Now what happens is that, since we all know that in GST regime, we are being assigned to one jurisdiction, be it center or state, either of the one. So likewise, the refund application which you have filed in RFD1 will also be allocated to one of the proper officer to whom you are being assigned. And that proper officer will do all the reimbursements applicable to you. It is important to note that no deficiencies memo can be issued after the acknowledgement has been issued. Further, way back we have seen that the functionality of withdrawing the application has also been given under Rule 90 sub Rule 5 and 90 sub Rule 6, but it should be before the issuance of any kind of orders like provisional refund order or final refund order, like this. So I hope I'm clear with the process. So can anyone confirm that are we understanding what I'm just trying to deliberate? Okay, thank you so much. Thank you. Now moving ahead. So now the question comes, okay, we understood that what is the process of filing the refund, how we'll get it, everything. Now the question is that which are those scenarios wherein I can claim the refund? This is very important. One is that, let's say you are filing your return, you have deposited extra cash in your cash ledger, or there are some TDS or TCS which is being deducted and is appearing in your cash ledger, then of that you can claim, and the period of 2 years will not apply only in this case. Besides, in every other case, the period of 2 years will apply. There could be other scenarios like, in case of appeal, you file, you deposit a kind of a pre-deposit of 10%. In case of e-way bill, it's 25%, right? So once you win that case at the appellate stage, then that amount also you can claim it as a refund. Likewise, there are situations wherein, let's say you have done wrongly, deposited the tax under the wrong head, then also you can claim the refund and pay the right tax and claim the tax which you have wrongly paid, right? Now comes that, what are those scenarios where you can claim the refund of your unutilized or accumulated input tax credit? It may happen that on account of, let's say, stock accumulation, or let's say if there is some kind of a startup entities, or let's say there is any capital intensive industries. So there could be a huge accumulation of input tax credit, and there could be other scenarios as well, right? So now, does the law permits you to take the accumulated, does the law permits you to take the refund of those accumulated credit? Answer is no. Only in few instances they give you the permission to claim the refund. One is when you make the zero rated supplies. Now, zero rated supplies is defined under section 16 of the IGST Act, which says that when you export the goods or when you make a supply to the SEZ unit or developer, then in that case, you can claim the refund of your unutilized input tax credit, number one. Number two is when your input is at a higher rate and your output is at a lower rate, then in that case, there could be an accumulation. There will be an accumulation of input tax credit. Of that also, you can claim the refund. So likewise, these are the scenarios under which you can claim. And all these options are separate options given on the common portal. And for each of the things, there are separate formulas as well, which we'll see in the slides to come. Now, I told you that there is a relevant date, and after that relevant date, within 2 years' time, we need to claim the refund. So in export of goods through seaways or airways, what could be the relevant date? I mean, like, when will the time period of 2 years start? So it will be when the goods will be leaving India. Now, what is that date? Is it a bill of lading, or is it the date of your shipping bill when you file? Is it the date on which you file your GSTR1 or 3B or EGM? What is that date? Likewise, from export of that, we'll see in the slides to come. Now, in export of goods by land, it is when it passes the frontier, and in post, the date of this dispatch of goods by the post office. In case of deemed exports, I'll explain that what is deemed exports, what is supply to SEZ unit, export of services, what will be the relevant. So all these are the relevant dates being given. So these are the few pointers which needs to be kept in mind if you really want to sail smooth in your refund claiming process. Then before you file your refund, make sure that all your GSTR 1 and 3B is being filed for the tax period for which you are applying the tax period for which you are applying the refund. Now, if you are applying the refund of your unutilized input tax credit, then in that case, earlier you used to give an undertaking. Now, there is altogether a mechanism given under the section 16 that you cannot claim credit more than what is appearing in your 2B or 2A. But still, an undertaking is required that just in case if your supplier does not pay the actual tax, does not pay the tax actually to the government, then in that case, whatever amount of refund which you have claimed has to be refunded back along with interest. There is a facility when we call the tax period. I mean, like, you cannot, let's say today you have done an export transaction, you cannot go tomorrow and claim your refund, right? So the refund has to be applied for a tax period, and tax period has been defined in the GST law as a month or a quarter, something like that. So the clubbing provision, so the GST law gives you the facility to club your refund tax periods to claim the refund. Now, this clubbing is really very important, and there could be more than 2,000 scenarios in all the type of refunds wherein you can optimize that based on your past transactions or based on your past trends. You can analyze that in how do we structure or how do we, or for which period we claim the refund. Please note that at the time of filing refund application, whatever documents are required under the Master Circular Rule 89.2, only those documents are supposed to be given while filing the refund, and there's no other documents supposed to be given. Please note there is no physical submission required for the documentation. Moving ahead, while in my first slide, which I showed that what is the process of refund, I told that within there is a time. I forgot to say one thing, that a proper officer is supposed to refund within 60 days from the date of receipt of your application. But in case of zero rated supplies, government has made a provision for provisional refund. Why? Just because there is no upfront exemption given under the GST law to the exporters. So in order to reduce their working capital load, the government has given a timeline of 7 days to the officers to refund 90% of the claim which you are making. But this provisional refund can be given only when the track record of the taxpayer says that there is no prosecution for in any of the last 5 financial years. Now, when you see that 7 days will be counted from RFD 2 once you get an acknowledgement. But it does not mean that RFD 6, which is the sanction order, cannot be given even before that. So if the officer, let's say you are regularly applying for the refunds, officer is also well sure about that what is your business mechanism or things like that, then in that case, probably he may take even less than 7 days to process your refund. So that is also even allowed. It is not mandatory that first in zero rated supply, RFD 4 has to be issued and thereafter only RFD 6 can be issued. It's not like that. For processing the refund under the provisional refund mechanism, if the proper officer feels that certain amount is inadmissible, then he will deduct only the inadmissible amount and the balance amount he will refund under the provisional refund mechanism. Please note, let's take an example that in RFD 1 you have claimed 100 rupees, provisional refund was given of 90, final refund comes for 70 only. Then in that case, the balance 30 will be credited to your PMT3 provided you do not file an appeal, and the balance 20 which has been erroneously refunded to you will be recovered along with interest and penalty. We also need to know that with a refund cannot be withheld in case of provisional refund. If the proper officer is of the view that a particular taxpayer should not get the provisional refund because his amount is being outstanding on account of some other reason, then it's better that he process the final refund only at the earliest and recover the due amount. So this was all about the provisional refund. Going forward, we also need to note that while a proper officer passes a final refund order in RFD 06, there is a provision that if he is skeptical or there are some scenarios wherein he can also withhold the refund. So there are two sections under section 54. There are two subsections under section 54, 10 and 11, which talks about the withholding of refund. Subsection 10 says that if the taxpayer has defaulted in furnishing the return, or the taxpayer has not paid any tax, interest, or penalty, any of these amounts, and those amounts has not been stayed by the appellate authority, tribunal, or the High Court or the Supreme Court by the specified date. Now, what is the meaning of a specified date? The last date of filing the appeal. So till the last date of the filing of appeal, if it has, oppose that if it has not been stayed, then in that case, he can withhold and he can even deduct the tax. And those taxes can pertain both under the GST law as well as the existing law. Existing law means the erstwhile excise or VAT or service tax law. So only when the return is being furnished or the due amount of taxes, interest, or penalty is being paid, then only the release order can be given. Now, there is another subsection which talks about withholding of refunds. So now subsection 11 says is applicable in those conditions when the order has already been passed. So after the order has been passed in RFD 6, within 60 days time period, if the commissioner or the proper officer is of the opinion, if the commissioner is of the opinion that it would create an adverse impact on the revenue or blah, blah, then he can withhold the refund. Now, who can determine this amount? Both the proper officer as well as the commissioner. So this was all about the withholding of refund. Now, the important thing which comes is that how the refund is being disbursed. So earlier, during the initial phase of the GST implementation, the respective taxes were paid by the respective officers. Let's say if it was pertaining to CGST or IGST, then it was the central tax officer. And while it was under the SGST refund, then SGST officer was supposed to pass an order. But now this assignment has been done online. Assignment of taxpayers has been done online, and refund application which has been filed on the portal is also being assigned to the tax proper officer online. So now it has been said that if the taxpayer is assigned to the central tax authority, then the central tax officer will pass refund under all the tax heads, and vice versa for state taxes. Now let us understand the process, because it's very important, because many a times we get a question that my refund is being held or it is not being reflected into my bank account even though a refund order has been issued. So we need to understand that once the RFD1 is filed, then the GSTN portal will generate a master file which will contain your name, GSTIN number, and the bank details. Because when we talk about the credit into the bank account details is mandatory to be kept in the master file. Now, these details are being shared to the PFMS. Now, if the bank account is not being validated, if there is any error, it will send back to the common portal, and common portal will communicate to the refund of proper officer or to the applicant. So now the applicant will do an amendment in the non-core field in REG 14 registration, and he will update his bank account details. Once he do that, that will appear in his drop-down option, and again this application will go to the PFMS. The bank account details will go to the PFMS for validation. Now, if that is being validated, it will create a unique SSE code, which we call it as a UAC, and it is a combination of your GSTN number and your bank account details, which is being used for making all the payments, because refund application you file from time to time. So it is always suggested that don't make changes in your bank account frequently. So once that validation is done, the proper officer now issues a payment order, sanction order, RFD 6, payment order, RFD 5, and thereafter the disbursal starts. So before this payment order comes, all these validations happens. Now, once that is being validated successfully, it goes to the DDO PO for the online school generation, and thereafter it is being further given to the bank for final disbursement. So this is how the disbursal takes place. I hope I'm clear to everyone till now. Can I get a message so that at least I can just check that whether we are going in the right direction or not? Okay. So now I told you that along with the proper officer doing a sanction of refund in RFD 6, he will also give a detailed and a speaking order as per the instruction number 3/2022. And for all the type of refund application, he will mention that under which category the refund application has been filed, date of filing, tax period. He will cross-check whether the same refund application for the same period, for the same category has not been filed in any other category. The details about the deficiency memo, if it has been issued, whether it has been whether filed timely or not, whether all the documentation, I mean, like all the details, all the peculiar details has to be listed in the speaking order. In some of the special situation, like in case of claim of refund, in case of accumulated ITC or deemed exports, there are few more things which needs to be included in the speaking order. Now, once this refund chapter is over, there is a huge possibility that refunds are not given within 60 days. Now, the question arises is, when this 60 days gets over, from which date to which date, and how the interest is being computed. So the provision of interest on delayed refund is given under section 56. Read with rule 94. So if your refund is not given, so let's take an example here. RFD 1 is being filed. Thereafter, RFD 2 is being issued, which is an acknowledgement. And in acknowledgement, it is clearly mentioned about the date of filing of your refund application. From that date, 60 days has to be counted. So assuming that 60 days gets over here, but the refund order is not yet passed, nor payment order is being given, and neither my bank account is being credited with the refund amount. So what should be the period? Should it start from the expiry of 60 days to refund order or to payment order, or to that point it gets credited into my bank account? So it is till the point it gets credited into my bank account. So why I'm saying this? Because there are many refunds which has been filed in the last 5 to 6 years, and there are various errors, or people have claimed the excess amount of refund, or earnest refunds has been claimed even for 17, 18. So now the proper officers are issuing the notices under section 74 by invoking the extended period of limitation. Now, from where this extended period of limitation will be computed? So from that perspective, it is important that only the date on which it gets credited into your bank account will be considered as the date of refund of tax. Now, there is proviso to section 56. Please note that in this case, we'll get refund at the rate of 6%. But this is a proviso exception to section 56, wherein if an order has been passed by the following authorities, and basis which, if you file your RFD 1, then within 60 days, your refund ought to be given. If not, then interest will be given at the rate of 9%. For the purpose of section 56, the first diagram which we have shown, if the order of refund is relating to any appeal before the appellate authority, tribunal, or court, then in that case, those orders will be deemed as the orders under section 56(1), and refund will be given at the rate of 6%. Order of interest will be given in form RFD 05. In case of pre-deposit, from the date of your pre-deposit, the interest will be calculated at the rate of 6%. Now, while calculating the period for which the interest would be given, a certain period has to be excluded from that. So there may be few scenarios. Like while processing a refund application, let's say officer issued you an RFD 08 show cause notice. And the time period to file the reply was 15 days, but you took an extra time. So that extra time beyond 15 days will be excluded for the purpose of computation of interest. There could be another scenario that your bank account was not validated, and because of which it took an extra time, then even that period has to be excluded for computing the interest. Let me acknowledge that there are various taxpayers who have a plethora of refunds claimed with them and that are not within 60 days. So it's humbly suggested that please revisit and take your refund of interest. Now, till here, we have done all about the provisions of the refunds. Now we will be going into the case specific things or the scenario specific things that, let's say, if the person is engaged in exporting the goods on payment of IGST. So I have already clarified that as per section 16 of the IGST Act, refund of zero rated supplies can be availed. Zero rated supplies means supplies of exports and supplies to the SEZ unit or the SEZ developer. So in both these scenarios, you can claim the refund under two routes. One is on payment of IGST and another is on without payment of IGST by filing a letter of undertaking. So we are dealing scenario by scenario. So the first scenario which we are taking is, if you are exporting the goods on payment of IGST, this was one exception situation wherein RFD 1 is not supposed to be filed and the shipping bill will be treated as the application for refund. So you can see that section 16(3) of the IGST Act earlier used to give an open option to the taxpayers to claim the refund or to go for either of the routes, whether you pay IGST and take refund or you file a letter of undertaking and claim refund. But now, basis the past experiences, which I'll be sharing in the slides to come, they have amended this section 16(3) and a new section 16(4) has been included under the IGST Act. So now the government says that we will notify the class of goods or services which can be exported on payment of IGST. That means that is not open to all the goods or services which you export. Besides, they will also notify class of person who can make zero rated supply on payment of IGST. So if you are making, now we are not dealing with the entire zero rated supply. Under the zero rated supply, one who is doing an export only of the goods and by opting the payment route, then in that case, your application will be shipping bill. Now, when the shipping bill will be treated, that the application has been filed or a refund application has been filed. So there are three things. One is when you file, when your conveyance, the in charge of your conveyance files the export report, giving the details of the shipping bill, then it will be treated that your application has been filed along with the satisfaction of two more conditions. That is, since you are making a claim of refund of under the payment of IGST route, so first you have to make that payment of IGST by filing your GSTR1, reporting those supplies in GSTR1, and thereafter reporting those supplies in table 3.1b of GSTR3b. And once you make the payment, then only it will be treated that yes, your application has been filed. Certainly, there is an Aadhaar authentication based on past experiences. They have realized and they have incorporated the Aadhaar authentication just to prevent from any kind of fraudulent activities in this. Now you can see here that, let's say you're an exporter. Now you have varieties of options available with you. You can procure your goods domestically. You can procure your goods from outside India. From outside India, if you procure, you can procure on payment of duties, that is basic custom duties, and on payment of IGST. Now, there is another option in imports. If you are a holder of advance authorization or falling under the EOU scheme, then the benefit of this two notification can be taken and you can claim exemption from the basic customs duty and the IGST, which is levied on the import transaction. Likewise, you can also procure your supplies domestically. Now, even the domestic supplies could be little different from each other. So this is very important. I would invite attention of everyone on this slide because my subsequent slides will be dependent on this concepts only. If you are procuring a service from me, let's say I am a registered dealer under GSTIN, you are procuring a service from me or you are taking any goods from me, then that's a normal supply for you. That's a normal purchase. Now, let's say I'm a supplier, you are an exporter, and being an exporter, you want that your working capital does not get blocked, for which the government has brought a concept of merchant exporter, wherein by availing the benefit of a notification, I will be charging only 0.1% on that transaction. Let's say the price of the goods is 18%, I'll charge only 0.1% on that. And I will give it to you. There is another concept of deemed exports, wherein, let's say, if you are an holder of advance authorization, or you are an 100% export-oriented unit, then in that case, you can take supply from me. I'll charge a tax. I'll charge the complete tax on that. But the government allows the refund. Either I myself can claim the refund, or you being the exporter can also claim the refund. So the option is given in both hands. So I'm just reiterating once. Domestically, you can make a normal purchase. You can make a purchase under the merchant export concessional rate notification benefit. Third is under the deemed export concept, wherein either of the two can claim the refund. So ultimately, the burden of the working capital is the idea to be reduced. That is why these two schemes are being given by the government, which is an merchant export and deemed exports. I hope I'm clear as of now. Now, the exporter has to supply its goods outside India, for which he will raise a tax invoice, export invoice, will do all sort of documentation compliance under the customs law. He'll file GSTR 1, 3B and do his Aadhaar authentication under the GST law. Now, once the EGM is being filed by the conveyance in charge, then in that case, it will be assumed that your refund application has been filed. Please note that in this case, there is no application as such like RFD 01. So here will be considered that your application has been filed, and thereafter the processing will start. So let's say if you have filed the details of your export transaction in GSTR 1, and those details has to be given in your shipping bill as well. Now let's say if there is a mismatch between the details which you have filed in GSTR1 and the mismatch between the details which you have filed in shipping bill, then first it has to be rectified. I'll show the process how it takes place. So let's say this is the common portal, GSTN portal, wherein export details has been given, filed in GSTR1. Now this common portal will transfer the details to the IceGate portal. Now IceGate portal will confirm whether the EGM has been filed or not. If the EGM is being filed, that confirmation will reach to the common portal, and common portal, when the GSTR 3B is being filed by that taxpayer or that exporter, then again it will transfer after doing a certain validation, it will transfer your details to IceGate portal, because please remember here we are claiming the refund of IGST which we are paying in 3B. So unless and until this 3B is being filed and your tax is paid in table 3.1B of GSTR 3B, which is matching, which should match with your details which you have furnished in GSTR1, export details. So only when this is being matched, then only your details will be transferred to the IceGate portal. And once it transfers to the IceGate portal, the IceGate portal or the proper officer, like the customs officer, will process the claim of your refund on each of the shipping bills which has been transferred to him. And it will automatically get credited into your bank account. So this is a hassle-free process. It's only that you need to properly file your GSTR1, properly pay your tax in GSTR 3B, report transaction details equivalent to what you have reported in GSTR1 in your shipping bill, and your refund will be transferred in your bank account very smoothly. There is no requirement of any visit to the office or something like that, nothing. Now, what happens that when you are exporting the goods on payment of IGST, my goods have been exported. Now, let's say there is an upward revision in the price, or let's say there is a downward revision also. Both the situation is possible. So earlier there was no mechanism. Like just 1 month back, exactly 1 month back, this rule has been brought in, that is rule 89(1)B, which says that if you have raised a debit note in respect of your transaction which you have exported under IGST, then in that case, certainly now that process won't work, because there will be no export consignment which will be going and the EGM would be filed. Then in this case, for the debit note, you have to file RFD1. And now, since there is no role of the customs officer, this has to be processed by the proper officer of your jurisdiction. The taxpayer, the proper officer to whom you have been assigned. Currently, the functionality is not being deployed on the portal like the categories which I have shown you in my earlier slides. So you have to apply it under any other category. Documentation again has been prescribed in rule 89(2)BB and BC. That is statement 9A and 9B. So now the question that arises is that since last 6 to 7 years, this mechanism was not there and people were stuck with their refunds on such kind of a debit notes. So whether their refunds can be granted from the perspective of 2 years timeline, from where will this 2-year timeline will start from? So in this case, they have defined the relevant date. So earlier we have seen that the relevant date was defined under the explanation to section 54. Now in this case, the relevant date has been defined under the said sub-rule only. Rule 89(1)B. Now it says that for the period before 10th July. So today we are standing on 10th August. Exactly 1 month before the amendment has been brought in. So all the refunds on the debit notes which has been issued or which pertains to past periods can be claimed 2 years from that date. And for the other cases, certainly it's, the 2 years will start from the relevant date, which is the I mean, like the date of your debit note, on the date on which you let export order is being given or the EGM is being filed. From that date only you have to take the 2 years time. So there are few questions that how do you deal with your past refunds on such kind of a debit notes? Certainly you have to pay the interest on your debit notes, because if you, since this is a case of an IGST, on payment of IGST, so you need to pay interest on that and thereafter you need to claim the refund. It is advisable that if you are doing exports both under LUT as well as export on payment of IGST, then raise separate debit notes. There is a dilemma that earlier there was no condition of export proceeds realization in case of goods. In services, certainly it has to be. So what happens to those transactions on which you have claimed the refund under the IGST route, under the original supply which you have made, and in respect of which you haven't got your proceeds from abroad? So whether the refund can be allowed on the debit notes which are being issued in respect of those transactions, this is a question mark. So I think government should come up and give some kind of clarification on this. Now, let's say there is a case of downward revision. Then FEMA law says that you can reduce only to the extent of 25% of your invoice value. But the GST law does not give any kind of a relaxation. If you have claimed credit in excess, sorry, if you have issued a credit note, then in that case, to that extent, you have to refund back the amount along with interest. Now, even in this case, where the IGST on payment of export of goods is being given, refund can be withheld. Now, there are three scenarios. Scenario number one, wherein the jurisdictional, see, in the export of goods IGST payment refund, it is the customs officer only who is playing a very key role. So the jurisdictional officer is of the view that the refund needs to be withheld in accordance with the provision of section 54(11). Then in that case, he can request to the customs officers to withhold the refund. In this case, the refund will be immediately transferred to the proper officer of the CGST or SGST, to whomsoever you are being assigned. We'll look this process of Rule 96(5)(a) going forward, but let's first understand the three scenarios. So first scenario is this. Second scenario is that where the customs officer himself determines that the goods which is being exported is in violation of the customs law. Then in that case, again, the further processing will be done by the proper officer of the GST. But this will not be transferred immediately when it determines that it is. An order has to be passed by the customs officer that yes, this is in violation. Now the third scenario is if the commissioner in the CBIC, North Block Delhi, or an officer authorized by the CBIC who is basically Principal Director General or the Director General of DGARM. Who can, based on data analytics or based on certain kind of risk parameters which is being given by the competent authority, can be classified as a risky exporter. And if these officers are of the opinion that the refund which the exporter is claiming, we have a doubt on the credentials only of this particular taxpayer, or if the exporter has made a payment of IGST using the input tax credit from those suppliers which are also on the radar of CBIC, then in that case, immediately the processing will be transferred from customs officer to the proper officer. Now, how will be the processing be done here? So in the GST, once the claim is being transferred to the proper officer of the respective jurisdiction, common portal will automatically generate an RFD1. Now, system is generating RFD1 at its own. How will an exporter know? So the common portal will also give an intimation to the exporter on the common portal itself. And this system generated RFD1 will also be deemed as your RFD1. Now forget about the shipping bill, deemed application, forget. In these three scenarios, your refund application now becomes your system generated RFD1. And the refund application will be deemed to be filed on the date of such transmission by the customs officer to the proper officer. Please note, once this is being transferred and RFD1 is being treated as a deemed application of refund, the entire procedure from rule 89 to 94 will be applicable, just like normal any other refunds. Now let's go, since these risky exporters are very troublesome, so we really need to understand that what is the mechanism that how this refund which is once being withheld can be released. So for understanding that, we need to understand the entire architecture of this. So let's say there's a competent authority, let's say CBIC or any other wing. They determine the risk parameters, and based on those risk parameters, DGRM creates a list and list of risky exporters. You can just see in this diagram, list of risky exporters along with their suppliers from whom he has particularly procured the goods, the ITC of which has been claimed, and using those ITC he has made a payment of IGST, and which he has which basically he is applying for refund under the export route on IGST payment. So now once the DGARM forward this list to the RMCC, Risk Management Center for Customs, thereafter they will create an alert in the EDI system. Now, once this alert is being created, the customs officer will now do 100% examination of export goods. Now, whether if the DGRM is skeptical about the credentials of the exporter, certainly 100% examination has to be done. You cannot get any relaxation under the Customs Act. The DGRM simultaneously will also forward this list to the CGST field formations, who will do a detailed verification of these people, and thereafter they will send a verification report to the DGRM, and if the DGRM will make sure whether the alert which has been created here needs to be continued or a no objection certificate has to be issued. So just in case a no objection certificate is being issued, then the customs officer at the port of export from where the goods have been exported, he will release the refund which is being withheld. Now, moving forward, recently what has happened that they also the system has also created a feature of all India suspension of import export code IC or the GSTIN itself by the DGARM officer itself. So you can see, now we'll be moving to the next slide. That those data on which the IGST scroll is not being generated will be sent to the GSTN, and GSTN will send it to the proper officer. All the risk parameters basis which that alert has been created so that he can verify accordingly. He will also forward, they will also forward RFD1 application and the verification report which the CGST field formation has given to the DGRM, so that he has all these things available with him to verify the genuineness of the tax exporter, to verify whether the ITC claimed is genuine or not from all the L1, L2, L3 suppliers. And he will also do the physical verification of the business premises. Please note that in this case, once the RFD1 is system generated RFD1 is being issued, then no deficiency memo can be issued in this. Processing will be same as per Rule 89. RFD6 will be issued thereafter. Whether he will sanction or reject, both in RFD6, and he will give a feedback on the comment portal whether the alert still remains to be, is still supposed to be continued or not. And the comment portal will send it to the DGRM, and thereafter DGRM will take the call whether to remove or continue. So this is the entire architecture which relates to the risky exporters, refund, and in case if this has been withheld, then how do you rectify your positions and get your refund. Now, before moving into the various aspects of this refund under exports, because we need to understand there is one Rule 96 which is dealing entire with the export of goods on payment of IGST refunds. So there are certain restrictions which has been implemented now in the law, which was not during the initial phase of the GST. So there were some goof-ups. So in order to understand that, we need to first understand this slide. Let's say we are just exploring the possibilities. Let's say I am an exporter of goods. Let's say I'm a taxpayer who is exporting goods, who deals in goods. Then what I can do is, I can do domestic supply of goods, which can be either taxable or exempt. Just in case if it is taxable, it can be under regular tax structure or inverted tax structure. If I'm exporting goods, then it can also be taxable as well as exempt. If it is taxable, it can again be under the regular tax structure or the inverted tax structure. I can also do the supply under the merchant export notification. I can also do the supply under the deemed export notification. I can also do the supply to the CES unit. And for which I can make the purchases both domestically as well as I can also import. So what I can do, purchases of inputs, input services and capital goods. Now this can be accrued from my regular supplier, ISD, RCM, import of goods. Now there are some, you can say, kind of a benefits which is being offered to the exporters who can claim the benefit of these notifications to reduce their burden of working capital in procuring these goods, because the ultimate agenda is to export the goods. So what are these notifications? I have already dealt in my earlier slide. So one is, if I am under the advance authorization, which is a deemed exports, merchant export drawback, and I can take the benefit of notification under customs, that is of 78 and 79, 2017. Because in regular export, I'm already being charged tax and it will sit in my pool of input tax credit. But being an exporter of goods, I'm being given these opportunities to reduce my working capital load and claim exemption from the duties of customs as well as duties of IGST under the benefit of notification number 78 and 79. Under the merchant export, I'll be charged, the supplier will give me the goods only at 0.1%. Under the advance authorization, which is called basically, if I'm procuring under the from the domestic suppliers only, then that will be treated as a deemed exports, under which either of them can claim the refund. So now I'll just go into further detail to have a better understanding of this benefits. Let's say this is a deemed exports. Now the government under section 147 says that it will notify that which type of goods, which supplies can be basically treated as a deemed exports. So they have given a notification number 48 2017, wherein if the intermediate manufacturer gives the goods or supplies the goods to the final manufacturer or the exporter, then in that case it will be treated as a deemed exports. In simple language, there are 4 such scenarios wherein if you are making the supplies, then it will be treated as deemed exports. So let's say I'm a supplier, you are in holder of advance authorization, then whatever goods I supply to you, let's say that goods is of 18%, then I will charge 18%, and either you or I can claim the refund of that. That means you are not being burdened, your input tax credit will not get accumulated, right? Now, if I am making a supply to an export oriented unit, or if I'm making a supply of capital goods under the EPCG license, then in these 4 scenarios, it will be treated that we are doing the deemed exports. Now, these are the documentary evidences. I said that documentary evidences has to be, either the supplier or the recipient can claim. So if I am the supplier and I am giving the goods to you, then in all the 4 scenarios, 2 undertakings has to be given by you. Let's say you are the recipient. One is that you will say that you will not avail the ITC on the supplies which I am, on the tax invoice which I am issuing to you. Second, you will not claim the refund and I can claim the refund. In case of advance authorization or EPCG holder, the jurisdictional tax officer will say or acknowledge that yes, the supplies which I have given to the recipient has been received by the recipient, by you. And in case of EOU, the recipient itself will give an undertaking that yes, you have received the supply. So these are all the evidences which are required to be produced when I am claiming the refund under the deemed exports. Let's say now, if you want to claim the refund, then in that case, you have to give an undertaking that the invoices on which you are claiming the refund, which you are mentioning in your statement 5B, that you will not claim, that you are claiming only the refund of those invoices. And at the same time, you will take an undertaking or a declaration from me that yes, supplier will not claim the refund. It has been clarified that the supply which I am making to you, B2B supply, then that tax which I am charging to you in my GSTR1 and which is reflecting in your 2A will not be considered as an input tax credit. That is basically a refund of tax, even though you are claiming. Let's say in a scenario in which you are claiming the refund, that will be treated only as a refund of tax. That will not be taken as a part of your input tax credit. So the provision of section 17 will not apply on. Likewise, in case of I have already dealt with the deemed exports. Now I am dealing with the EOU. Now, how the EOU will procure the goods is like, let's say I am the supplier. I will issue a tax invoice to you. And before that, the recipient, let's say you are the recipient, you are the exporter. Assume yourself as an exporter. Now, you being the exporter, want to take the benefit of deemed exports, then in that case, you need to give a prior intimation in Form A being approved by the development commissioner of yours, and you will send it to me. Thereafter, I'll supply the goods to you. Now, the recipient will endorse that yes, the supply has been received on the tax invoices, and it will intimate, and he will intimate to the proper offices of both mine's proper offices as well as yours proper offices. And the details of all these things has to be compiled in Form B and has to be submitted on monthly basis by 10th. Now comes the third, which is merchant exporter. I'm not talking about the deemed exports now. Deemed exports is over. Now this is another notification wherein the exporter can take the benefit of paying a reduced rate of tax on your inputs. So instead of 18%, 12%, 5%, I'll be charging only 0.1%, subject to the condition that you will export within 90 days. And there are few more conditions. I'm not going into details. I have done a mapping of all this. Now comes a very important slide of this, that earlier, at the very inception of the GST law, Section 16(3) gave a open option to you being the exporter, that you can make an export on payment of IGST, or you can make a payment of or you can do an export under LUT. So, but what happened? That government has to come up with a restriction that you cannot go for the IGST refund route. IGST refund route is a very simple. I'll export my goods, will file my shipping bill, and will get my refund back into my bank account. But there were certain possibilities wherein the domestic input tax credit, which were used for making the domestic supplies, were also encashed through this IGST route. Further, at the inception of the GST law, there was nothing in the law which gave the exporter a relaxation that yes, if I am engaged in exports, I'll export my goods, but at least give me exemption from taxes on my input side. There was nothing as such. Thereafter, they came up with this kind of relaxations of deemed exports, wherein immediately upon payment of your tax, either it can be claimed by the supplier or the recipient, which I have explained in my earlier slide. Merchant exporter, I mean, like, I'm the exporter, I'm being charged only 0.1% of tax. Or if I am availing the benefit under the customs notification. Now, what does this customs notification is? 78 advance authorization, 79 fuel. So under this notification, you get an exemption from basic custom duty as well as the IGST. Now, let's say if the government has given you all these benefits and made your imports totally duty-free, and if you are now exporting the goods, why are you supposed to go into the IGST route? That is why they brought this restriction that if you are availing the benefit of so and so notifications, basically this 5 notifications, then in that case, you cannot go for the refund under the payment of IGST route. You have to mandatorily go under the LUT route, which we will be seeing in the slides to come. Now the question is that if you are the exporter and you want to pay the basic you want to avail the basic customs duty, you want to pay the basic customs duty and you don't want to avail the benefit of IGST exemption, then in that case, earlier there was restriction. Now they have clarified by way of an explanation wherein they says that if you have availed the exemption only of BCD under 78 or 79, सिर्फ आपका अगर BCD ही आपको पेमेंट करना पड़ा है इंपोर्ट पे, सॉरी BCD ही खाली आपने एग्जेम्पशन क्लेम किया है और IGST आप पेमेंट कर रहे हो, देन यू कैन गो फॉर द IGST पेमेंट रूट. आप एक्सपोर्ट कर सकते हो अंडर द पेमेंट ऑफ IGST रूट. So now we need to understand that this restrictions has come from 9th October 2018. 9th October 2018 के पहले the export of goods was allowed even if you availed these notifications, you were allowed the refund. But what happened that in case of Cosmophil, the Honorable Gujarat High Court was of the opinion that this restriction will apply retrospectively. Even though the government itself had clarified by notification number 53/2018 by removing the retrospective effect. Section 54 notification number 54/2018 से ये restriction आया with effect from 9th October 2018. उससे पहले ये restriction लाई गई थी with retrospective effect, but there was a lot of hue and cry in the industry. So they removed that retrospective effect by way of notification number 53, which the Honorable Gujarat High Court did not consider. And even the government clarified it categorically in its circular number 70/44/2018 that this restriction will not apply before that date. So now the question is that currently the proper officer would issue you a show cause notice asking to refund back the IGST which you have claimed, even though the benefit under these exemptions were also claimed by you. So if you are in the hands which is richful with both the benefits under the customs as well as under this, or if there is an intent to encash domestic credits from this route, then what are the alternatives available with you? So one humble view is that, let's say, if you have availed the benefit under this route, certainly after 9th of October, on or after 9th of October 2018, you cannot go for this route, right? So if you want to go for this route, and sorry, if you have availed this, if you have taken the benefit under this route, then you have to refund. So what I would suggest is, instead of refunding the tax which has been refunded to you under GST along with interest, because IGST which you have claimed is on the sale value, which also includes the value addition. But let's say if you have imported something and you have claimed the benefit of IGST exemption also, better to forego that exemption. Better to amend your bill of entry, make a payment of IGST, because under the Customs Tariff Act, there is no provision of levying interest on delayed payment of IGST under the customs. So you are being saved from that, number one. Number two is that the IGST component on your import value of goods would be certainly lower as compared to what you have paid IGST under the on your sales value. So we need to consider all this permutation combination, and we really need to analyze that. There are several notices which are being issued to exporters on this line. So we really need to align our practices also. Wherever we have done the mistake, we need to rectify. Going forward, we need to adhere to these norms to the extent the safeguard is available, because these views are being replicated, or rather we can say that we can place a reliance on Mahindra and Mahindra case, wherein the Honorable Bombay High Court, while dealing with the erstwhile resign case of delayed payment of CVD and SAD, has told that the power does not exist under the Customs Tariff Act on delayed payment. And even an SLP was filed, and that SLP was dismissed. It is also important to note that this Rule 9610 has been challenged in various high courts. Going forward, as we have now completed the export of goods on payment of IGST, now we are moving to export of zero-rated supplies under LUT. So now when we can make supplies under LUT? LUT can be opted only when you are not being prosecuted under the GST or any kind of existing law which is still in force. And the tax evasion is 2.5 crores or above. If you are not being prosecuted, then go with LUT. If you are being prosecuted, you have to give a bond and a bank guarantee of 50%, 15%. Earlier, the facility of LUT was not available to all the taxpayers. It was limited only to certain star rated export houses. Now, that facility has been given to all the taxpayers. So only thing you need to do is you need to file an LUT online in RFD 11. There's no need of any physical submission, unlike the initial stage wherein the law was framed in such a way that it has to be issued in duplicate and has to be sent to the jurisdictional commissioner, get signed, and so on and so forth. So now the process has been simplified. Facility, I mean, like once you have taken an LUT, then giving declaration in respect of each and every refund claim that you are not been prosecuted is not desired. Because ultimately, in LUT, you have already given an undertaking that if you don't adhere to the norms, then you are supposed to pay the IGST along with interest. Please note that the same procedure has to be applied mutatis mutandis on the supplies made to the SEZ unit or developer. Now, in export of goods on payment of IGST, we have seen that whatever payment we have done, that will get as a refund. But in case of refund of unutilized input tax credit on making zero rated supplies, we have to follow the formula given under the law. So you have to basically calculate that what is that percentage of your exports or zero rated supplies of your GSTIN that is being, and that ratio has to be applied on your unutilized input tax credit so that you get the refund proportionately. Now, over the period of time, we have seen that there has been many changes based on past experiences. So if we look at the formula, that how do you calculate your zero rated supply of goods? Let's say I've done a supply of export, I have done a supply to SEZ unit or developer of goods. I'll take the value which I have charged in my tax invoice, simple as that. But government has brought in a restriction. It says that, let's say if I am engaged in exporting of this particular goods, and domestically if I have supplied it at rupees 10 per unit, then only then, and let's say I have exported this same thing at let's say 100 rupees, then government won't give you the benefit for the purpose of calculating this unutilized input tax credit to the extent of that ratio. It has brought a restriction that they will consider only 1.5 times of your domestic rate which you have charged to your domestic supplies. So whichever is lower, either your transaction value or 1.5% of your 1.5 times of your domestic supplies, whichever is lower, that needs to be considered. Now, what is transaction value? It may happen that in your tax invoice, which you have reported in GST R1, and the value which you have reported in your shipping bill is different, then the lower of the two needs to be taken as a part of a transaction value. Now, how do we ascertain the zero rated supply of service turnover? So for calculating the service, let's say you have given me, let's say you are the exporter, I have given you an advanced payment in the month of August, and during the month of August, you haven't rendered me that service. Then you cannot take that payment as a part of turnover. Point number one. Point number two, if you are claiming, if you are if you have given me the services, let's say in the month of September, then for the purpose of calculating the refund for the turnover of September month, you will take into consideration. Now, let's say that if you have given me the service during the period, and during the same period I have given you the payment, then that needs to be a part of turnover. So what basically needs to be excluded from your zero rated supply of service is the advance which you have received, but for which you have not completed the service. Simple as that. Now, whatever turnover you have ascertained here, that needs to be a part of adjusted total turnover. So how do you calculate your adjusted turnover? First, take the entire turnover of your state. From that, you remove the turnover of your services. For the computation of services turnover, zero rated services turnover, take the turnover of the zero rated supplies according to this formula, and there could be certain non-zero rated supply of services. Do add that turnover, and at the end of the day, reduce your exempt supplies or the turnover in respect of which the refund has been claimed under rule 89(4)A and 4B. अब ये रूल 89(4)A और 4B है क्या? ये सिंपली वही दो नोटिफिकेशन से डील कर रही है. एक डीम्ड एक्सपोर्ट्स की जो बेनिफिट्स आपने लिए और दूसरी मर्चेंट एक्सपोर्ट्स की बेनिफिट्स. तो वो बोल रहे हैं कि आप उसकी टर्नओवर को एक्सक्लूड कर दो, क्योंकि उसकी जो कंप्यूटेशन होगी ना, वो रूल 89(4) के अकॉर्डिंग नहीं होगी. उसके लिए उन्होंने सेपरेट फॉर्मूला दिया हुआ है, दैट आई विल डिस्कस इन माय नेक्स्ट स्लाइड. रूल 89(4)A एंड रूल 89(4B, डीम्ड एक्सपोर्ट्स एंड मर्चेंट एक्सपोर्ट्स. Okay, but my question is, where is this restriction coming from that a person who is engaged in deemed export supply or doing a merchant export supply cannot claim the benefit or cannot claim the refund according to formula given under rule 89(4). 89(4) में clear बोल रहा है. But we have to adhere to the formula which has been given, which excludes from the zero rated supply of goods, because deemed exports, merchant exports, आपका sir, turnover can be only in respect of goods. That is why it has been removed from here, as well as given the adjustment or benefit of adjustment in adjusted total turnover. Now, what is the input tax credit of which you will get the refund? So this will not include your ITC on capital goods. This will only include your inputs and input services. This will not include the ITC on which the refund is claimed under rule 49, under rule 89(4)A or 4B. That means कि अगर deemed exports, let's say you are an exporter, आपने deemed exports के अंदर कुछ benefit लिया है और उसका refund आप claim कर रहे हो, और merchant exports का भी benefit लिया है और 0.1% का भी आप refund claim कर रहे हो, तो उससे जो related ITC जो आपकी 2A में आया होगा, you cannot include that as a part of net ITC. So you have to remove from that also. Now there are certain clarifications that ITC on consumables are also inputs. Inputs में क्या क्या आएगा? So something which is not being capitalized is also inputs. ITC claimed during that particular period. Let's say you are claiming the refund for the month of August. तो अगस्त में आपने जितना इनपुट टैक्स क्रेडिट क्लेम किया है, उसको माना जाएगा कि वो ITCN ना कि डेट ऑफ इनवॉइस से उसको लिंक किया जाएगा. So I am clear on this formula. The same formula is replicated even under input tax, inverted tax structure with a certain change. I'll explain it later. Now coming to rule 89 4A or 4B. Let's say मैंने आपको कुछ deemed exports किया and you are claiming the refund. You have taken the option to claim the refund. Then you have to claim the refund of your unutilized input tax credit on other inputs. Because आप ये देखो कि जब मैंने आपको कुछ सप्लाई की होगी डीम्ड एक्सपोर्ट्स के अंदर में, तो आपने उसका रिफंड ऑलरेडी डीम्ड एक्सपोर्ट्स के कैटेगरी में ले लिए. लेकिन ऐसी कुछ और सप्लाईज हो सकती है आपकी एक्सपोर्ट से रिलेटेड जो कि अदर इनपुट से इनपुट सर्विसेज हो सकती है. इवन दो यू हैव टेकन द बेनिफिट ऑफ डीम्ड एक्सपोर्ट्स नोटिफिकेशन, there could be other inputs or input services also on which you need to claim the credit, and you are not prima facie given the benefit under rule 89(4). आप जनरल फॉर्मूला में नहीं जा सकते हो, आपको स्पेसिफिक फॉर्मूला में आना पड़ेगा. अब बात ये है कि where is the specific formula? Unlike 89(4), there is no specific formula. So here you have to maintain the separate records of your input and output. So to the extent it is being actually used for making the zero rated supply, other inputs and input services, you can claim the refund. Now, where will you claim the refund? So it needs to be claimed under any other category. There is no requirement of debiting this amount from your credit ledger. Only when the proper officer confirms, then only you are supposed to debit this amount. Likewise, in case of merchant exporter, in case of an exporter who wants to claim the refund of unutilized ITC, but he has availed the benefit under these notifications, he can claim, but he has to claim under rule 89(4)(b). So, in fact, one of the taxpayers, Messrs. Philex India Limited, instead of claiming the refund under this, they have claimed as per the general formula by challenging the constitutional validity of rule 89(4)(b). But the Honorable Gujarat High Court did not dealt with that particular issue and has categorically said that constitutional challenge still remains. And they have said it clearly that input-output records can be maintained very easily, or rather that can be certain, it's not that easy to maintain, but it is possible to maintain because ultimately the pricing is being ascertained based on your standard input-output ratio. So you need to claim under this category specifically, under this particular rule. Now let's say I have violated the provisions of rule 96(10). Officer has come before me to get my refund back. Let's say I have given it back. Now, since I have availed the benefit of deemed exports and merchant exporters, I'm supposed to get my refund under rule 89(4)(a) or 4(b) subsequently. So there was no rule as such before. So in case of Sobika Impex, Honorable Madras High Court said that procedural irregularity should not be given much weightage. And since the substantial exports have been made, so if the exporter is able to substantiate that yes, he has done the export and legitimately he has done, then he will get the recredit of whatever tax IGST he has paid back to the government. He'll get the recredit, and thereafter he can claim the refund of unutilized input tax credit according to the formula rule 89(4)(a) and 4(b). I hope I'm clear up till now. Now for claiming, filing the refund under the LUT, there is a restriction on the calculation of refund amount. It has to be least of these three. One is the maximum amount as per the formula given in 89(4), or the balance at the end of the tax period in which you are applying for the refund, and the balance at the time you are filing the refund application. So whichever is lower, that amount you will get. Now, since this is related to an unutilized input tax credit, so you have to first debit the amount from your credit ledgers. So first you have to debit from the IGST if it is available, and then equally from the CGST, SGST. And if there is a balance still remaining, then you can debit it from the other heads. Now, there was a challenge in relation to refund of compensation cess. So let's say my input is such that wherein compensation cess is also levied, let's say for an example, coal. There is a circular on this which says that even though your output does not have a compensation cess on it, you can claim the refund of the compensation cess. Now the challenge here is that this clarification is issued that when you are doing an export on payment of IGST, then you will get a refund of compensation cess. But what about in case of LUT? Now, another challenge was in respect of export of electricity. We all know that electricity has been classified as an export, as a goods on which there is no GST. Possibility what exists is that you can make domestic supply as well as exports. So even in generating electricity, you can have your input services and capital goods with you. So if you want to claim the input tax credit, unutilized input tax credit as refund, then you need to file RFD1 under any other category. Since this is related to unutilized input tax credit, you need to debit from your credit ledgers the respective amount. But in this case, unless and until the proper officer verifies everything and says that now you can claim the credit, now you can claim the refund, at that point in time, I need to debit from my credit ledgers. So we have seen that in special scenarios which are coming from the by way of circulars, which ask us to claim under the any other category like rule for 89(4)(a) or 4(b) or this particular refund. In such cases, you are not supposed to do the credit ledger. You're not supposed to debit your credit ledgers upfront. Now, in case of electricity export, there are 3 documents which are supposed to be given. One is the details of invoice number, a tariff at which, as per the agreement, the copy of agreement has to be enclosed. There is a regional energy accounts team which maintains that how much energy are you exporting. So based on that, what is that particular statement has to be given, right? For the purpose of computing the refund, you have to go to Rule 89.4. Rule 89.4, turnover of your export supply, zero rated supplies upon adjusted total turnover into your net ITC. So whatever is the ratio, you are supposed to claim the refund. Now, in this case, how will you compute your electricity supply being exported? What is that value? So the value is what you charge in your tax invoice or what is given in your energy statement. So whichever is lower, the quantum, let's say you are saying you have exported so and so quantity and your statement reflects so and so quantity. So the lower of the two will be taken and needs to be computed according to the tariff rate, which is given or agreed according to the contract. And the same effect needs to be taken in the adjusted total turnover, provided that while you are excluding the exempt supply, you are only supposed to remove the exempt supply to the extent you are doing the domestic sale. Now, what is the relevant date in this case? How will you ascertain that on which date the electricity has been exported? So for the simplification, the circular says that last day of the month on which the electricity has been exported according to the statement by the REA. Now, this is very important. There are definition of exports of goods and export of services given in the IGST law. Export of goods simply says that once you do sending a goods out of India is an export with no condition of realization. But you are being qualified as an export of service only when your forex is realized on those transactions. Because in case of goods, you can identify from your EGM that it has exported. The customs officers can confirm. But in case of services, how will the officer come to know that it has been exported? So the payment is only one thing from which a proper officer can ascertain that yes, it has been exported. That is why it is there a condition. So till March 2020, there was no condition in relation to export of goods that while you can claim the refund, there is no condition of sale proceeds being realized. And even the master circular clearly says that since there was no such precondition, so the proper officer should not insist or should not deny the refund. So even as on date, if you are getting a notice on this account that since your sales proceed is not being realized, then you are, whatever refund has been given to you is an erroneous refund. You're supposed to give back. Then probably we can rely on master circular. But now the question is, what about the master circular only dealt with rule 96B, and 96B does not have any power under the statutory law. Law was amended and the proviso to section 16(3) has been inserted only with effect from October 2023, very recently. So can we take a ground that since there was no power in the statute, so even before October 2023, even if the sale proceeds has not been realized, it cannot be classified as an erroneous refund. So in case of non-realization of sale proceeds, now going forward, the law says that according to FEMA guidelines, you have to bring all your sale proceeds within the FEMA timeline, 9 months, or the period can even be extended. Now, even the timeline has crossed or the extended time period has also crossed, but if you are unable to bring your sale proceeds, then in that case, the law says now that within 30 days from the expiry of that timeline, you have to pay back the refund which you have got along with interest. There are few caveats. Let's say RBI writes off the requirement of your realization of sale proceeds, then in that case, certainly the proper officer under the GST cannot do any kind of a recovery. And let's say a scenario is such that wherein your recovery has been done, but thereafter you have realized your sale proceeds, then in that case, if that has been realized within the extended period of RBI by the RBI, then in that case, you can claim the refund back, provided you give the proof of your realization within next 3 months. Going forward, there is an amendment. Since supplies to SEZ unit or developer is also a zero rated supply. So if you have, earlier there was no such condition of authorized operation mentioned while you make the supply to the SEZ unit or developer. But now this condition has been inserted, and you have to basically get an endorsement from your development commissioner that the goods which the supplier has sent to the SEZ unit or developer is being received and is used and is to be used for the purpose of authorized operations only. Only in those cases that will be said that it is a zero rated supply. So now the question arises is whether this amendment is clarificatory in nature or whether this will be held retrospectively or prospectively, because there are plethora of refunds which has been sanctioned to the unit to the suppliers who have claimed refund of these zero rated supplies, and they might not have been used for the authorized operations. So in case you receive the notices claiming that this has been the erroneous refund, then accordingly we need to state that this is not a retrospective amendment and this needs to be carried out prospectively, even though the rule 89(2) said that it needs to be for the authorized operations. Certainly a challenge will come, but at the same time, we have also seen that department, while processing the refund to these suppliers, have always checked that whether this is being used for the authorized operations or not. At the same time, there are various rulings, various judgments also, which says that even though it has not been mentioned that it has to be for the authorized operations, but if the rule prescribes the methodology that in which situation will you be getting the refund, then it needs to be adhered to. So we need to strike a balance and we need to see on case to case basis. Now coming to the inverted tax structure. So am I clear to everyone up till here? Thank you so much. Sakshi, since I think we are over with the time, right? So please give me another 10 to 15 minutes. I'll try to just wrap it up because almost 90% of the things have been covered.
Sure, sure, sure.
Thank you so
Please go
much.
ahead.
Yeah. So now if you look that first we need to ascertain that what is inverted tax structure. So inverted tax structure is a case where your inputs is higher at the tax rate and your output is charged at a lower tax rate. Let's say your input is at 18% and your output is at 5%. Then will you be able to claim the credit? Certainly section 54(3) allows you that in such cases you can claim the credit, provided that your output is not nil supply or exempt supply. One important thing is that if there is a change in rate, let's say from 18% to 5%, and you have a stock accumulation on that, you cannot say that this will fall under the inverted tax structure and balance should, your respective ITC should be given refunded back. Ideally, it should not have been that way, but circular is on it, and circular clearly bars that kind of a refund under the inverted tax structure. Because if you have a huge quantum of stocks, the value addition ideally remains constant. So if you have procured something at 18% and your rate of tax is now at 5%, how will you adjust that? That will go on accumulating. Now, for the purpose of computation of inverted tax structure refund, earlier the formula was such that हम तो रोज जाता नहीं है भैया, तुम जो बोलेगा वही चल जाता है, हम तो राजा टक्का उतरना है. Hello. Yeah. So how do we need to compute that what is the refund which is available to you of the unutilized input tax credit in case you make the inverted tax structure kind of a supply? Certainly, upon your total turnover, what is the ratio that is coming? And of that ratio, you can claim the input tax credit subject to the condition that you reduce your tax which is coming on input tax structure, let's say 5%. And whatever is the tax payable, you just need to reduce from that particular ratio of unutilized input tax credit. But after the judgment of VKC Footsteps by the Honorable Supreme Court, it was recommended that there is an anomaly in the formula. So the government thought fit and gave this benefit of including input services also as a part of ITC which is available, which is being used for making the tax payment of inverted tax structure. Please note that unlike zero rated supply, wherein we were getting the refund of unutilized input tax credit of input and input services, here you are getting only the benefits of inputs, neither of input services nor of capital goods. Rest everything is same, just like zero rated supply formula. Please note that this change in formula has been made effective from 5th of July 2022. So now the question arises is that whether, because under the amended formula, you are basically entitled to more input tax credit, more refund of unutilized input tax credit. So whether this formula is applicable on all the refunds retrospectively or prospectively, or in respect of refund applications which has been filed only after 5th of July 2022. So it has been very categorically clarified by the CBIC that it will be applicable prospectively. That any applications which is being filed after 5th of July, only in that applications you can claim the benefit of the new formula, even though your applications are pending either in appellate stage or before the proper officer. Even in those cases also you cannot amend the formula. Now, the question is that what happens that in case of unutilized input tax credit, you need to debit your credit ledger. Just in case if you do not get the refund or there is an erroneous refund which is being given to you, right? Then in that case, it has to be refunded back. It has to be recredited. So how the recredited mechanism works is that you pay to the government along with interest and penalty, either at your own or on being pointed out by the proper officer. This payment needs to be done through DRC3 through electronic cash ledger, because if you have claimed the benefit or the unutilized input tax credit refunds, those refunds are given to you in your bank account. That is why you have to first make payment through DRC using cash ledger. And after that, you have to make a request in Annexure A according to Circular 174 to the proper officer, and the proper officer thereafter will take 30 days time to recredit that. And this recredit will be done through a form PMT 03A. Now, how can the refund be claimed by the unregistered person? So in case of unregistered person, there could be scenarios wherein a person is being engaged in a long-term contracts of which the value along with the GST advance payment has been given, but due to any chance that has either been terminated or cancelled or so on and so forth. So in those cases, a mechanism has been brought in by the government which allows you, being an unregistered person, to take a temporary registration and claim the refund. So let's say you have bought a flat, which is basically a construction service which you have taken, and even before the completion of the construction service, that has been terminated by you. Then in that case, you can get the refund of the GST which you have paid, provided that the time limit of issuing the credit note has not been expired by the builder. If that has expired, then in that case, since the tenure of the contract is very long, so government says that since you have not received the supply completely, then you are eligible for taking the refund. So for that, you need to take a temporary registration from the respective states. You need to add a bank account detail. You need to do the Aadhaar authentication, and you need to apply under the refund under the unregistered person category. Now, let's say one service which was cancelled by you was in respect of the construction service which you have availed in the state of West Bengal, and another was in regards to insurance premium which was in let's say in the state of Odisha. So separate refund application has to be filed in different states along with the documents like statement 8 and certificate from the supplier under Rule 89(2) KB. He also needs to give an evidence that yes, it is the unregistered person who has borne the incidence of tax. In this case, the relevant date will be the receipt of that particular goods or services, and just in case if that date is not available, then the letter which is being issued to you regarding the cancellation or termination will be treated as the relevant date, and within 2 years you need to apply for the refund. Now, how to process the claim in case of canteen stores department? In canteen stores department, generally the supplies are being made to the unit run canteens or to the authorized customers only, and it is not open to everyone. And since the goods are being offered at a subsidized rate, that is why the refund to the extent of 50%, refund of 50% is being allowed on all your purchases. For this, RFD 1 is not to be filed. It is RFD 10A. A new rule has been inserted. That is Rule 95B. It needs to be applied on a quarterly basis. Undertaking has to be given that the goods which are being received, or the goods, ITC on such goods which you are being claiming the refund, is used only for the subsequent supply to the unit run canteens or the authorized customers. For this purpose, the relevant date will be considered as the last day of the quarter. And thereafter, the processing will be same as Rule 89. Now, this is regarding the refund of pre-deposit. From the date of your pre-deposit, you get the refund. So you need to just select the appeal, whatever is the demand order date and everything. And you can simply apply, uploading the details of the orders. Refund to the special agencies. These are some of the statistics, and this is how the refund and the issues relating to exports, imports, and everything is being covered. Hello. Sakshi, I'm
Yes.
done with this. Can we take some questions and answers?
Yeah, I think there were some questions in the chat box.
Mm-hmm.
I'll just have a look. Yeah, so there's this question, can we claim refund where ITC is accumulated and the company is in the course of cancelling its GST registration in that particular state?
No. But you can really strategize. There are various options available, and there are legal routes. You can think of, if you have any other businesses in hand with you, or in your any family businesses or any such kind of a thing, then probably you can think of strategizing how to claim the refund in that case, if the quantum is really so high.
Okay. Since the passing of GST notices and orders for financial year 17-18, 18-19, and 19-20 have extended, whether refund can also be filed beyond the relevant period of 2 years?
No, refund cannot be filed within the relevant period of 2 years. Certainly, you can take the benefit of the suo motu extension given by the Supreme Court, but now that even that timeline has been expired, the period has already been over. But yes, many of the taxpayers have taken a benefit of that.
All right. Can a travel agency claim refund for inverted duty structure scenario?
So, may I know how, what is the rate structure on the travel agencies?
I think.
Yeah, can I speak right now?
Yeah. Please.
Yes, please.
Yeah. So travel agencies having some receipt of services of lower rate, like less than 18%, and the service supplies at 80%.
Sorry,
so
come again.
Some
This
services,
is not perfectly audible. Can you please come again?
yeah, some services which is lesser at lesser rate, maybe 5%.
Okay.
And their services are charged at 18%.
Yeah,
so there is a
certainly.
difference.
Because in the inverted tax structure, it is not only but you are saying that input services, right?
Yeah, input services. Yeah.
No, then in that case you cannot take. Sorry.
How it is restricted?
It can be in other ways around that. Let's say if you are a service provider, okay, let's say you are a kind of a government contractor or something like that, and your output supply is at 5%, right? Then, and your input is at a higher rate, then probably you can take. In this case, it's not available.
No, if it is the reverse case, like we are supplying at 5% and we have receipt of services at 18%.
No.
Vice versa.
In input services, you cannot take the benefit under the inverted tax structure.
Input services is restricted. Which
Yeah,
section
it
it
is
is
completely.
restricted?
Sorry,
Which
you need
section
to
is used?
you need to read section 54, subsection 3, and along with the rule 89 5, subrule 5.
Okay, okay, okay. Thank you.
We also have another raised hand, Mr. Deepak Dhanuka.
Please.
So you may please ask.
Yes, good evening, sir. I'm
Good evening.
audible.
Yes, you are audible, please.
So it was a very nice session and very energetic session. I
Thank you
think
so
so
much.
that multiple time we shall hear your lecture. So my question is what actually the matter came a long back ago. So what I remember that the SSC was a work contractor and his again his inputs were at 18% and output were at 12%, right? Now he has made a refund application and calculated refund amount as per the rule, the formula given. But the officer rejected saying that your purchases has not been sold, so these are still on your closing stock. So whether the SSC, whether the authority concern is justified, or the SSC replied that I have calculated as per the rule given, and there is a proper appropriation, and I am a work contractor. My billing depends upon various aspects and all. So this and that they have replied. The matter is still sub judice, and we are just planning to figure out. So the authority concern, main concern was that the purchases goods which you are claiming input are still in your hand, that has not been sold.
I got your question. So basically, in this case, there is no as such restriction, and there is no one-to-one correlation even in the formula given, right? So you can certainly claim, you can give a very strong argument that there is no one-to-one correlation, and one-to-one correlation is only given under the entire refund provision. That is only in Rule 89 4A and 4B. In case of deemed
Okay.
exports and merchant exports, wherever the exporters are taking these benefits, only in that case. Other than that, there is no as such specific restrictions.
Okay. Thank you, sir. Thank you. Thank you so much, sir.
All right, I think we don't have any more questions. So we are close to the end of the session. So thank you so much, sir, for sharing your valuable insights on such a complicated topic. It's not just complicated in terms of theoretical understanding, because there are so many sections, rules, circulars, and amendments. But along with that, the practicality of it is also so difficult, because obviously deficiency memos and refund rejections are very common these days. And summing up the entire topic and the nitty-gritties of this topic in these 2 hours was honestly a task, and you have done justice to that. So thank you so much for sharing your time and your expertise. I'm sure we've all had great takeaways from the session, and we've all learned a lot. Thank you so much.
Thank you so much, Sakshi, and thank you everyone for having patiently listening to me. I hope you have taken some kind of a value addition. Thank you so much.
Definitely. Thank you so much. Thank you.